Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Craig Mull, and CFO, Brian Jacobs from Cipher Pharmaceuticals. Cipher trades on the TSX Venture Exchange under the symbol CPH, and it also trades on the OTC under CPHRF. The company is currently trading at $3.53 with about 25 million shares outstanding, or about an $89 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. One quick correction. I noticed CPH on the TSX, so not on the Venture Exchange. I want to make sure we got that clear. Craig and Brian, thanks for joining us today. We have spoken with you in the past, so we always love to catch up and find out how you guys are progressing. And you guys just came off your Q1, so there's a few things to talk about. But before we sort of get into any updates, why don't you remind everybody what Cipher's all about?
Yeah, sure. Thanks, Paul. Thanks for the introduction. Thanks for having us back. Craig and I are always excited to come here and speak with you folks. So tell you a little bit more about the Cipher story. So, like we talked about when we were with you last time is, Cipher's really been focused on reshaping its business and becoming a very cash generating specialty pharma company. So if you take a look at any of our recent our filings over the last 3 years, Craig Mull, who's an owner manager, stepped back into the business because it wasn't performing the way he had hoped it would. He's been a long-term owner and investor, shareholder of Cipher. And over the last 3 years, we think Cipher's results speak for themselves. So on a 3-year average perspective, looking backwards, Cipher's generated 50% EBITDA margins. Nobody really in our space would generate that type of cash generating profile. And also kind of on average over the last 3 years, we've generated $2 million US in cash. Most recently, we had adjusted EBITDA of 3.1 in our first quarter ended Q1 2023. And our cash increase has gone up by about $4.6 million. So, the way that we look at it is, proven track record and management teams that can deliver on what they say, really speak for themselves. And, that's what Cipher's done over the last while. So we've positioned our company uniquely, whereas a lot of our competitors in the specialty pharma space, generally will be investing in expensive sales forces to commercialize products, which we don't. We use commercial partners, which has a good risk profile, and it's very good from a cash generation perspective. And we have in-licensed certain development pipeline projects, but we aren't spending resources on running the clinical trials ourselves. Because again, that's we believe that the risk appetite for that isn't for our shareholders. It can burn cash, and when those clinical trials aren't successful, then you get to the end with nothing. So Cipher's kind of walked that middle profile, which is very different than other specialty pharma companies out there. So where does that leave us now? We ended the first quarter with in excess of 33 million US in cash. The other thing that we worked on was at the beginning of this year, we closed a revolving credit facility with the biggest bank in Canada, RBC, who really likes our business and likes where we're going. That credit facility has up to $35 million US in cash available under it. So, with that amount of capital, which is nearly around 70 million US, we're looking to grow. A lot of our growth, we're focused on acquiring products in the US market, because the US is just a larger market than the Canadian market. We wouldn't shy away from doing any other types of acquisitions. but that's really where our focus is right now. And both Craig and I, who I'll hand over to give some to round out my thoughts, we're spending nearly half of our time focused on our next leg of growth inorganically, as well as very excited about our pipeline products that we will have coming in 25 and 26.
Thanks, Brian. I think that you covered most, if not all, the points that I was going to bring up as well. But I just would like to emphasize to the viewers and people on the call or in the meeting, Cipher over the last 2.5 years has really concentrated on developing a profitable company that would be ready to take on opportunities and grow. And that has happened. As Brian said, we're generating about $1 million a month after tax. We have over 30 million US on our balance sheet. Brian has organized and managed and negotiated credit facilities with RBC for 35 million US. We're seeing a great deal of opportunity in the marketplace. Unlike Cipher, many companies in the specialty pharma business are suffering at the moment, either through having too much debt or just not having positive cash flow. And in this market, investors are not attracted to that. As a matter of fact, they may be moving out of those positions. And we're seeing many companies coming to us now looking for an investment or some form of deal. And we intend to review and really concentrate on those opportunities. And when the right one comes around, we're in a very good position to strike on it. So as Brian said, our real focus and the bulk of our time now is reviewing different opportunities, and those number of opportunities have increased substantially over the last 6 months. So, Paul, I think with that, I'll turn it back to you, unless you have any other specific questions for us.
No, that's perfect. Why don't we jump into sort of some of the quarterly data? So you guys just announced Q1. You guys continue to obviously add cash. What if anything, happened in Q1? I saw revenues were down a little bit, but your EBITDA profile improved. What can you tell us about the quarter?
Yeah, I can jump in there on the financial highlights. So our licensing revenue was down. The reason why that is because we renegotiated our contract with Sun Pharma, who manages our largest product down in the US. When you look at our licensing revenue, the other way to look at it is that's our US based revenue that comes through commercial partners. When we renegotiated with Sun last year, that what's very typical is you with a legacy asset, you will renegotiate at lower royalty rates. So that's really the decline. So sequentially, we weren't trending that far behind on a licensing revenue standpoint, and it was really related to renegotiating that contract. Product revenue kind of held relatively flat. It was slightly down, but that was likely just due to timing. I'd say otherwise, it's been trending up over the last number of years. Epirus is our main product, and we continue to see good expectations from it. One of the things that we're doing is continuing to raise brand awareness within the dermatology community on Epirus, because relative to its main competitor in Canada is a product called Accutane. It's really Accutane Plus because it has the same profile or efficacy with it, but it has a better food effect. So you don't need to take it with a fatty meal, which is usually an advantage for most teenagers that are dealing with severe acne. So really just reaffirming that message to dermatologists. And we went and spoke to them and assumed they all knew that, but many of them didn't. So some light brand awareness. We believe that we're going to continue to have growth from that product going forward. And then, lastly, you touched on it, was, as we have declining revenues in some areas like licensing, we continue to manage the rest of the business. So year over year, even though we saw that revenue decline, our earnings didn't fall off. And what the true testament to that is, look at the direction our cash balances are going. I think what's really lost right now is within EBITDA. Everybody's forgotten the I in EBITDA and how that converts to free cash flow. But we don't have any I because we're not debt laden. We have been utilizing tax losses, so we don't have a cash tax payment. So it's a really strong cash generating profile, and we continue to be a strong cash generator.
Let's talk about the cash. So 33 million, roughly 33 million US in cash. Another, well, I see a total of 68 million in what you guys call growth capital. Clearly, you guys are looking for deals, but how does an investor look at that? Are you guys looking for a couple big home run type deals, or are you looking for a lot of smaller deals, and maybe even kind of what category or status of deals are you looking for?
Maybe Brian, I'll take a shot at that, and then I'll turn it back to you. So, some of the things that we've been looking at are more opportunistic, meaning that, there's somebody that is in trouble. They're looking to raise some money because their funding has been pulled, or the market isn't receptive anymore. So we're looking at some of those opportunistic opportunities as they come available, or as we're made aware of them. But our real focus has been on looking at companies primarily in the US that have a NASDAQ listing. They've got some good products. They perhaps have issues with having too large a sales force, or some other type of overhead type problem. And in those situations, we would, and we're looking at those closely. In those situations, we would go in and clean the company up, look at their commercial expenses, and basically do what we did to Cipher 2.5 years ago. Right size the business, get it EBITDA positive, use the NASDAQ listing, and likely combine the businesses. And that's really 10,000 feet, type of view. And we're finding that there are lots and lots of companies in the US in that condition. And so we're being quite selective in what we're looking at. In the Canadian market, obviously, there are at least 4 or 5 companies that would be in the same condition. Too much debt, not enough earnings, or no earnings at all. Large sales forces that can't really, that you couldn't justify the expense of based on the projection of their revenue for their products. We are also looking at individual products where, perhaps a large pharma or even a small pharma company says that, they want to sell the product for whatever reason. Some of it may be to raise cash for development programs, for example. So we're looking at those products, and those are typically considered legacy assets. Very stable products that have been on the market for a long time, have gone over the competition phase and are, producing stable revenue without any real commercial efforts. So that's another area that we've been looking at. We've been looking at that closely for the last 4 to 6 months. But, at the moment, we're seeing more opportunity than ever before, both from a company standpoint and a product standpoint. And it's become a buyer's market.
Yeah, I was just going to bring that up. I mean, it certainly feels that way with a lot of the sort of the life science stocks out there. But is there any categories you want to stick to, or maybe stay away from? How do we look at that?
Well, we prefer, on our wish list would be, a company or a product that is in the derm space, for a number of reasons. Cipher's current product portfolio is mainly dermatology, but the dermatology also has some built-in protection to it from competition. Whether the product comes in a topical form, which is more difficult to manufacture. Derm products have a certain amount of protection to them. But we're also looking at, some other indications that would fit into that category as well. And CNS is a real good example of that. When a psychiatrist starts, prescribing a particular medication to a patient, it's unlikely that he would want to switch around to something else or try something else because of the sensitivities of the ailment. So we have found, and I think that it's fairly well known, that CNS products have a certain protection against being genericized or converted, just based on the fact that if the product is working, the psychiatrist or the physician doesn't want to mess around with that. So that gives you an idea of what we're looking for. And again, we have a good concept, focus and concentration on the U.S. market.
Gotcha. Do you guys have the sort of the resources or the manpower to sort of feel comfortable that you're looking at enough deals, or?
We've got, it's more than just Brian and I. We're looking at these deals. We have some consultants and advisors that help us, examine, for example, the products. We have a group that we go to help us analyze those products from a medical standpoint, from a market access standpoint. We have a commercial advisors that help us. So we're not the only ones looking at this. We may do some screening, but if we're getting serious on something, then we call in the right people to help us.
And it sounds like the business is running well. You guys are busy looking at deals, but what challenges are you facing? Is there anything that keeps you up at night right now?
Well, we don't want to do the wrong deal, so that keeps us up. But the business is very stable now. We certainly don't have the some of the heartaches that some of our competitors are having right now, particularly from a debt standpoint. Our products are stable. We'd like our development product, the MOB-015, which is the nail fungus product, to move along quicker than it is, but it's going well. And I don't think that it would be reasonable to have a different expectation on the timeline on that product. But that is truly an exciting product for us. If the product delivers the results that we expect, I believe that we could take the vast majority of the nail fungus market in Canada, which is roughly $80 million. And at the moment, there is one product that has 90% of that market.
Wow.
And that's called Jubilee, and it's sold by Bausch or Valiant. And that product's coming off exclusivity imminently in the next, Brian, I think two months. I think it's gone.
That's right.
So, it's a huge opportunity for us. We won't be able to get it onto the market until, middle of 2025. But, based on what we're seeing, and if the results come out as expected, there's no reason why that product couldn't take the vast majority of that market.
Wow. And other products?
We also have a psoriasis product that we've in-licensed from Can-Feet. And the market for that, again, we have the Canadian rights for it, and the specific market for that is about $46 million. And we'll have to see how the how the rest of the phase 3 trial goes, but that would be another nice addition for Cipher.
Mhm.
Probably more like late 2025, early 2026.
Mhm. Do you have the right amount of cash? Like in some ways, sitting on too much cash isn't very attractive, but it never hurts to have lots. But do you have the right amount of cash, you think?
Never enough.
Good answer.
Never enough.
Yeah, in a day and age like this,
Yeah.
I think that answer is certainly king. But really, that's why we think about our growth trajectory is we got the cash to do it. We wouldn't have raised or got involved with getting a revolving credit facility unless we were very bullish about the future. Showing that we haven't jumped at some of the, deals could have been done over the last 6, 12, 24 months, but we've been patient. One of the problems in specialty pharma industry as a whole is overpaying for assets. So we're not going to jump at that. But, really deploying the capital and kind of our next phase of inorganic growth would be, our number one focus for cash. And then I think there's a question that might have come up, and it's a good lead into, should we do if we look at the capital we have available to us at 75 million, we do a transaction and add products, the cash profile or cash generating ability of the company only goes up. That brings us much closer to our pipeline, which Craig said is more in the 25 and 26 timeframe. We would look to add a dividend because, where Craig has always had a vision for the company as a long-term owner and now manager is to return it to a royalty style company. So, strong cash generation, become a dividend player, be NASDAQ listed. So I mean, that would be something very different. We already think we've positioned ourselves differently than any other spec farm out there. All of them need cash and don't have the earnings profile. So we're already different. And then, standing out and being known as a royalty style company and strong cash generation is where we want to go.
Makes sense. As investors on the outside looking in, where do you guys think we should pay the most attention to as far as any kind of catalysts or metrics that are indicating you guys are sort of continuing in the right path?
Well, Paul, I mean, if you take a look at what we're trading at, we're trading at, and Brian, correct any of these numbers for me way up. But we almost have half our share price in cash. We're trading at about a 3 times multiple of EBITDA, and we have no debt, no interest, real cheap, and we are in a very, very enviable position right at the moment. And we're going to be disciplined. We're not going to rush into a deal. Time is on our side, and I think that for investors, the way that I'm looking at it, because I am an investor. Very stable base business that is terribly undervalued, but with great growth potential, given the situation in the market and our cash and our ability to move quickly if we need to.
Yeah, and we're seeing that very important in the seller, like we've turned into, it's a buyer's market and sellers are motivated and need to move quick. So the ability of, you get inside the fence and be able to participate because you got the cash, you have the financial resources, and there's going to be fewer bidders. So.
Yeah, no, the way I was going to position it is you guys are, you're cash heavy in a buyer's market. It's a pretty enviable position to be in. I agree. I think stock is pretty cheap, certainly on a number of different metrics. Is there anything we should have covered that we haven't covered?
From my perspective, I think we've done pretty good here. Craig and I do this repeatedly, so I think we touched on a lot of our our metrics. I don't know if you had anything, Craig, that you thought that we should highlight. Watching Moberg, and Moberg is our partner bringing through the MOB nail fungus product. We're always very open with everyone. Go track Moberg, listen to their announcements, and they're very confident. They're launching the product in Europe, so they're comfortable with the safety and efficacy of it. And they're doing an additional study in the US, which we're also waiting for. But that can only enhance the product. What it doesn't make it not economic or viable to bring to market now. So we're very positive that product can drive the next phase of growth as well.
That product definitely has huge potential for Cipher, given that that existing drug, that Jubilee that I mentioned earlier. When we were out talking with dermatologists, they say, "Yep, Jubilee is the best product on the market." And then not long after, and it isn't very good either, but it's the only one available to them. And so, if we can get the results that we're expecting, I think that that physicians will happily switch to the product.
And maybe touch on a little bit of that. What do you think will make it better? Why would they switch?
Well, there's good question, and I can answer that quite quickly for you. First of all, Jubilee is once a day application of a topical on the nail. The Moberg 015 product, the one that we're talking about, is once a week application. More importantly, probably than that, is the fact that when you're evaluating these products, what's important is something called a complete cure rate. And the complete cure rate is made up of something called the mycological cure rate. How well does the product get rid of the fungus? And then the second component is, what does the nail look like when you're finished with it? And that's what's important to dermatologists or podiatrists that may be looking at this. I can tell you the mycological cure rate on the MOB product is significantly higher than Jubilee. What this trial is about is to deal with the coloring of the nail. So with the MOB product, the nail is left, white until it grows out. So, particularly in the summer, and particularly with women, they want to be able to wear sandals. So, they want the nail to look half decent, or they're not something that, is going to, revolt people or whatever. So that's important. And what we have found is that the mycological cure rate for our product is significantly higher. We believe that by reducing the dosing, that the coloring will also be better than Jubilee. In which case, if we check those two boxes, we're definitely away to the races with that product.
Right on. Fantastic. Well, cool. We always like to leave you guys just with the last little minute or so, just to give a key takeaways or any key message you want to make sure everybody walks away with today.
Let me start, Brian, and then you can add. You can clean up what I say if you don't mind. Cipher has gone through quite a change in the last 2.5 years. We have focused on making money. We focused on reducing our debt, and we have worked hard at stabilizing our business. And we've done all three of those. We are now ready for Cipher to grow. And we are spending, as Brian said, a great deal of time because there are some really interesting opportunities for us right now. And until we find that opportunity, which we will, we'll just continue to bank about $1 million a month. And we'll continue to do that until we find what we think is the right acquisition.
Fantastic. Brian, anything to add?
Yeah, I'd just say, Cipher's found itself at the right time in the right place. We've you know, the balance sheet is strong, you know, strong capital structure and proven track record are what investors that are coming to us asking. You know, they see we're incredibly cheap and undervalued in their view, especially if you just take out the cash per share. And, you know, that's the message that we keep on giving everyone to say, you know, there's nothing you're not seeing. We're focused on growth ahead. We're positioned incredibly at the right time. And then if you just think about it in the specialty pharma space, most of our competitors are not only running out a runway or it's already run out. So, I mean, they're going to have to divest and sell them to someone, and we'll be a bidder and looking at everything. So, you know, being in this position at the right time, at the right place, it's yeah, it's certainly exciting for Cipher and where Craig and I are spending all our time. So.
Fantastic. Well, I mean, congratulations, guys. I think you've done a extremely impressive turnaround since we started talking. Businesses, you know, generating a lot of cash, like you're saying. Cash is king in this market, certainly in this time that we're in right now. And you guys, you know, looks like you're on a healthy path with other deals in front of you. I want to thank you guys for joining us today. It's been always great to catch up. We've been speaking with CEO Craig Mull and CFO Brian Jacobs. Cipher Pharma, symbol again was CPH on the TSX. Guys, one last time, thank you for joining us today.
Thanks very much.
Thanks for having us.
Appreciate your time.
Got it.
Thanks. Take care. Bye-bye.
Take care all.
Bye.